it's a macro market. What's driving stocks is not what's happening to individual companies, but what people see in the macro environment. The analogy I would offer is if you value an individual company, it's like having a home inspection before you buy the home. But this home is located on the Florida coast and a hurricane is coming. And guess what? If a hurricane's coming, the first questions you ask about the home have nothing to do with when did the air conditioning get put in, but will I withstand the hurricane? So in a sense, right now, people are focused on the macro. The second thing to remember about a market like this is a market that has very little to do with value right now. It's being driven by mood and momentum, as you can see just in this shift from what happened last week to this week. I mean, as I was looking at the news this weekend, if you just looked at the news, there was talk about Credit Suisse going under and calamity around the corner. You'd have thought Monday was going to be the worst day in history. But guess what you saw? A very different movement in the market. So my advice to investors is to recognize that the day-to-day movements that you see in this market have little to do with fundamentals and a great deal to do with mood and momentum because people are off balance. Too much has happened too soon this year for people to try to make sense of even what's coming. And until they get some consensus on where we're going to get this volatility, these up and down days.
How much do you think the fact that we are seeing relatively less participation than we normally do plays in a role? Because if you're looking if we're going to talk from just a technical perspective right now, and you look at the 3580 that the S&P stopped at, that's basically bang on line with the 200-week moving average. And if you look at the 4320 that we stopped at a couple of weeks ago when we had the end of that, I suppose, initial rally coming off the lows, it stopped right on the 200-day moving average. And for me, that would suggest that a lot of the trading activity we're seeing is algorithmic based as opposed to it being perhaps just any kind of sentiment coming through from the markets.
That's actually consistent with what I said about mood and momentum being the driving forces. When it's mood and momentum driving prices, it's all about, where do people feel comfortable coming into the market and leaving the market? And you know what? While I don't use charts, I'm not a great believer. I understand why people who are traders look at charts because there is a mood and momentum issue and a prediction that might come out of charts that you can't get out of fundamentals. So it might be pure coincidence, but I think that in a sense, you're right. It's the technical factors that are driving this market on a day-to-day basis. But this too shall pass. Fundamentals eventually will come back, and you got to be ready for their comeback.